Good day, afternoon tea with Travis. Today is November 18th, Tuesday, and boy, market's interesting. Right now up on the House of Representatives, they're listening to the big three automakers plead their case as far as a bailout for them. As you've all heard in the news, I'm sure with Chrysler, GM, and Ford, they're all just burning millions of dollars a day trying to stay afloat, and they're trying to decide, the Congress is trying to decide if they should help bail out. And a lot of representatives and senators are thinking no. So Representative Shelby stated that they should just all file bankruptcy. So that's the easy emotional knee-jerk reaction. But the far-reaching impact of bankruptcy for anyone in the big three would be pretty daunting, knowing that they would be writing off debt to other U.S. businesses. So it's not quite as easy as that sounds. So the trading day for the Dow has been up and down. It's been as high as 160 up and down as much as 150 down, and it's now trading pretty much flat. And same thing with mortgage-backed securities, or your mortgage rate that we talked about. It's been in sideways trading since November 5th, and so we haven't seen any real gains or decreases in mortgage rates since November 5th. A few things happened today. Oil prices are down to $54 a barrel, down $100 from back in July, which is pretty amazing. And the big number that came out today was the PPI, which is the Producers Price Index. And there's two things the Feds look at. They look at the main number, the big number, and then they look at the core number, which is basically minus food and energy. So you take out oil prices and cost of food, and they measure all the other prices, and that number actually went up, whereas the big number, the total number, came down. Actually, the lowest number in the 40-some years of them tracking this. It's the lowest number for inflationary pressures. So all this seems probably maybe kind of confusing, but the reality is that we're still not facing inflationary pressures as high as they had thought. And with oil prices coming down and the lack of spending and unemployment jumping so much, the report came out yesterday. They thought unemployment may jump as much as 7 to 7.5%. It's right at 6.5% right now, but just in 45 days they feel it could jump to 7.5%. With Citibank talking about laying off 50,000 people a day. 50,000 from one company is pretty daunting. And then you look at even here locally here in Oregon, we have one of our local companies in Boise Cascade going to lay off 300 people locally here in our St. Helens area. So the economy is tough right now. Mortgage rates continue to stay low, and they probably will most likely here as long as oil prices stay low and we're in this global economy crunch that we're in. Outside of that, some good news came out. HP actually projected a strong fourth quarter that's coming up, and a profitable fourth quarter. So that helped stocks rally a little bit, even based on the bad news with the PPI having a higher reading, minus food and energy, and so on. So that's about the update for today. The Fed meeting minutes come out tomorrow. Outside of that, there's no big impactful reports coming out this week outside of something major maybe happening globally with another Fed cut in another economy. But for that, it's a great time to buy, great time to lock in on your mortgage rate, and that's about it for now. So give us a call if you have any questions. We look forward to serving you, and be blessed.